Good morning to all traders and welcome to another Markets in Waves. Today is June 17th, a day after FOMC, and looks like, things have changed a little bit according to the last message that we've received. Now, looks like the Fed is likely to increase interest rates in 2023 twice. So the game plan changes a bit. That is giving us, of course, a stronger dollar. And as one might have thought or think, changes to all our structures. But to your surprise, I don't personally yet see much of a change. There is, of course, some invalidations, particularly on the euro dollar. Actually, just on the euro dollar, but the rest of the structures still remain intact. You might think that guy is crazy, but guys, once you see the analysis, you will understand why I remain, adamant to my main scenarios and where those are going to be invalidated, as we have been talking about actually for a while now. DXY, Euro USD, Pound, oil and gold. Most important for me that we need to pay attention to. Obviously, there's others. We need to look at S&P and stuff, but we cannot go for more than 5 pairs on a daily basis. So let's go and start at the DXY, the US index. We're down here. I was expecting at least a previous high, a high above the previous high over here, W, to get us some sort of, signal. We got this at 78.6. Then after this, we were expecting the 100. Obviously, the FOMC gave us the 50 Fibonacci retracement of wave 1. And it's very likely that we're going to get higher up, perhaps the 9161. This is the 161 extension of waves W and X, or even the 161 of waves A and B in this move to the upside, because this is 1, 2, 3, 4, 5. That's the B. 1, 2, 3. We currently see 4, and we're going to get 5 further up. So we're going definitely to see a fresh high, okay, which might or might not be a false break above wave 4, okay, or it might be a continuation even to the upside around 91.92, which is a 6.8 Fibonacci extension of this move to the downside, the retracement. Yeah. Now, should we break above 92, this is when this scenario for me will be invalidated, guys. Until then, it's not, okay, because that will be wave 1. It will make this move to the downside non-impulsive, without that meaning that the trend is going to change. Because in case we break above 1, it could be a case where this is going to be an ABC, okay, so that will be the A, that will be the B, and that will be an ending diagonal EC, yeah, that will be W, X, and Y, X, and Z perhaps for wave 2, okay, which means when we get to 78.6, then we'll get another ABC, ABC, and ABC, and that will be an ending diagonal in primary wave 5, since we are now in primary wave, we are in primary wave 5, but we finished primary wave 4 up here. Now, the moment we get invalidated on here, yeah, there will be equal chances of this, and as you well know from before, turn into our alternative, which would be that we ended down here. This is a leading diagonal in wave 1. This is a correction in wave 2, quite a deep one, yeah. And now we start a multi-structural move to the upside. That's 1 and 2. That's 1 and 2. We'll go 3, 4, and 5. That's going to be 3, then 4 and 5. That's going to be 1, and then we'll start all the way up. Okay. Another scenario, guys, that must come into play as well. All of those pretty much are going to be validated / invalidated at the previous top, guys, 93.42. Yeah? Another one that comes into play now is this particular one, wave 4 being a bit larger, okay, which means this is going to be ABC for a W, ABC, X, and W, X, and Y. For Y, wave 4 is going to come here, and then we're going to see the move to the downside in 5. So multiple scenarios now with this particular move to the upside on the DXY. Let's have a quick overview of EURUSD. In my last scenario, I was looking at, well, that was 1, 2, 3, 4, 5. Then we're looking at 1, 2, 3, 4, 5 for leading diagonal, and we're looking for 1, 2, 3 to end down here and continue higher. Multi-structure move to the upside. That was my 1, that was my 2, and that was my minor 1, my minor 2. We said invalidation will be received down here. We got the invalidation now. Okay, unless magically, which I don't think so, that's WX, that's the Y, it's like 99% of wave 2, of wave 1, sorry, 99%, which is a bit, you know, we've already pretty much gotten there. And that means that would be, you know, like wave A. Yeah, we're gonna get wave B, we're gonna get wave C, or a flat. But this is very unlikely, guys. Yeah, it's just there, just so that you have that in mind, because we can expect anything in the markets. So with this being invalidated, okay, in my opinion, that's invalid already. I'm looking this now as a leading diagonal. You might probably say to yourself, well, you were looking at an ABC over here, and that would be like another X, and then we will get a wave Z down here. Yes, I was, and that is still the alternative, guys. Okay, however, for now, and because we've only just broken this, you know, we're still far from understanding whether this is a correction in 2 or a correction in Z. In either case, I'm not saying it doesn't matter, but in either case, the trend is bearish in the short term. Okay, this is my W, this is my X, this is my 1, 2, 3, 4, and I expect another leg to the downside for 5. The 61.8 will make a very nice level to see whether we're going to start moving back inside this channel. As long as we remain outside this channel, guys, we keep moving lower, which means the chances of this being an X and a Z are increasing. Okay, at the end of the day, do not forget as well that if this is a Z on the downside, that could easily be 1, yeah, and that could be like 2, that could easily be 3, yeah, we might get 4, yeah, and then we might see another ABC for wave 5, and that would be like an open-ending diagonal or something like this. So it's very important to pay attention to what prices, how prices react around this channel trend line. Okay, now I've told you about the main, I've told you about the alternative as well, so I think we're good to move to the next one. I'll be honest, I don't, okay, something I need to mention, I don't like this as the beginning of leading diagonal. I mean, the trend line makes sense and everything, it's just a very long one, then 3 and 4 and 5, it's just, you know, 1 is extremely bigger than 3 and 4 and 5, sorry. But still, and here's the thing, guys, you know, we don't go with the scenario that I'm favoring most. We go with the scenario that the markets are showing us is more probable, okay? And for now, this is the one. I'm not looking at favoring here particular things because the FOMC and because of whatever. I'm trying to remain as unbiased as I can when I'm analyzing. Let's go on GBPUSD. That one is playing out exactly as we expected. Not that the DXY isn't, the euro is actually the one that is playing out not as we expected. So we said 1 and 2 running flat. We got the 1, 2, we expected downside. That's an impulse in wave 3. Okay, that's definitely gonna get a 4 and a 5. Okay, and then the 4 and the 5, of course. So in my opinion, guys, there is more downside to be seen on pound, because don't forget that this is an ABC flat. Well, it's crossed above, so it's either going to be a running flat or an expanding flat. It looks like more likely it's going to be a running flat variation, because this is what the structures are currently showing us. Like wave 3 is going to be here, then 4 and 5 around the 138, which is the perfect level for a running flat. should we take into account the length of wave A. So I'm expecting this correction to end soon, okay guys, and then get another leg down, and from there correct and move lower down. Now again, the channels are important. Let me just go from top to 2 and from 1 all the way down. You can see that it's a bit closer to getting back in the channel, okay, but obviously getting back in the channel is not necessarily going to mean that, you know, we're going to see prices continue. We'll look, of course, at the top channel in that scenario, right? But we can move back and go to the medium and then move lower back down. But, you know, should we remain below this channel, obviously that means that prices will be more, the chances of being more bearish will be higher. Okay, don't forget also that the other scenario could be a case where this is just a WX and this is 1, 2, this is 3, 4, and 5, guys, and wave 5 ended here, 3, 4, and 5, yeah, which means this is going to be 1, 2, 3, 4, 5 for some leading diagonal. We're going to get 2, 3, 4, and 5 for A probably, then B, and then C. It depends, but it's going to be obviously a much deeper correction than the one we expect now around 138. Okay, that's the alternative. Also, another scenario, wave 4 ended here. This is 1 and 2, this is 3 and 4, and we're going to get 5, okay? Because that can still be some sort of diagonal pattern in wave 5. Now, USOIL, I finally think we are in for a correction now after we've received this new high, invalidated, so let's take this off, we invalidated the alternative flat, that's the flat down here, running flat down. In my opinion, we've got 1, 2, 3, 4, and 5. To me, it looks like we're finished, and now we're moving down. It's going to be 1 and 2, 3, 4, and 5 for A, B, and C, who knows. But obviously, you know, we're looking at this to, we're looking at this to end below, above the 6160, okay? We are expecting a continuation to the upside once the correction is in. Preferably, we want to stay above 66.55 or so. Even more preferably, 68.60 will make a very nice double bottom over here, and then we'll continue higher. We're going to see which levels we'll go to later down the line, obviously. Now, if we break above 1, the chances of this being an end 1, 2, 3, 4, 5 intermediate degree for 5 ended and we correct down, okay, are going to increase. What will this mean is that wave 1, guys, is here, right? This is what it's going to mean. And we're going to get a much deeper correction in primary wave 2 that is going to get us perhaps down to this channel or even lower down. So we really need to pay attention where this correction is going to go down to, right? Now, you might ask, are you sure we're correcting? It looks like so far we are, okay? Because when I see candles like this popping suddenly just to take some stops, you know, then I'm thinking that, you know, this is the case. But I wouldn't be surprised if we get another leg up to take out 73.36 and then continue lower down. We do have an engulfing bearish candle over here. I'm just not sure I like how this continues because it doesn't look much impulsive, okay? And actually, having a look at the RSI and the MACD, we've got very nice signals in both cases, okay? Oops, excuse me. In both cases, and we have also the volumes increasing, okay? Which means now we've got this volume increasing down here. We're going to see prices moving higher. We're going to see a few candles start popping strong here in order for this downside move to be sustained. Otherwise, you know, another high false break again is very possible. In either way, I'm expecting that correction to start taking place, start forming slowly. And we talked about the alternatives. Okay, and then have a quick look on gold. Nothing changed on gold, guys. I'm still expecting this correction in 420. We've got 1, 2, 3. oops, I thought I was drawing. We've got 1, 2, 3 expanded flat in W, ABC in X, ABC, we're going to C in Y of 4. To me, this looks like an A, B, and 1, 2, 3, 4. Again, I'm expecting another leg down. All of them, guys, the index, the euro dollar, the pound, and gold, we are in wave 4, and we're expecting another leg, the fifth leg, to end either the corrective moves in general or at least the first wave of the corrective move. Okay, so not sure where exactly we're going to head up to, but looking for another leg down. Now look at the gold. It's way more sustained to the upside than euro is, because we remain within this channel, guys. We've had a rejection here, and it's very likely that we remain within this channel, even down to 1786, or even down to 1765, which is to me the market bottom that I see in this particular market for wave 4. We wouldn't want to go below wave 1 at 1756, obviously. So this is what I'm looking for the moment for gold. What else could happen is, of course, we could get that you know, ABC having been done here, Y, you know, we can get an X, and we can get another wave down for Z and get us to 1750, and then continue all the way up, which is an alternative. This is a variation of the main scenario, I would say. But once we break below 1, guys, this is when things are going to start getting a bit more complicated. We will expect that to be an ABC, and then we will expect that to be some sort of move to the downside. That will be wave 1, 2, 3, 4, 5 for A, then B, and then C, or something like this. We're going to get a new low and then continue the way up. Either way, we are either finished wave 4 down here, or we're going to finish it. And there is a fifth, in my opinion, coming in. Okay, so guys, this will be all for the day. I hope you did enjoy this video. If you did, show your appreciation with a like, turn your notifications on to receive our daily Markets and Waves video notification. And if you have any questions, do not hesitate to comment. I'll get back to you as soon as I can. We have another trading session yet tomorrow, and we're going to be here again to analyze the markets using Elliott Waves